Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, October 14, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, first and foremost, today was Columbus Day, so the banks are closed. The bond market was closed, but yet the stock market is open. We had a quiet day, low participation, and in the end, what we get is a continued melt-up operation. We don't take anything away from the uptrend. The uptrend is your friend until the very end. She is, and I repeat, is getting a little bit extended away from what we like to call home base or the 20-period moving average. Each and every time Mrs. Market gets a little bit too far from home base, she likes to come back toward home base, pay a visit to home base. It's kind of like a kid riding his bike out before dinner. Kind of got to stay close to home. You got to stay close to home so you can come home for dinner in a timely manner, so mom could find you in a timely manner. That's just the way it works. They don't get too far from home base. When you flip over and look at the weekly chart, it's the same routine. She's a little bit extended from home base each and every time she gets a little bit too far from the 20-period moving average. She seems to come back in to the 20-period moving average, or at least in that direction. You could see it happening here and back here and over here. And I have my tool that I have to re-engage over here. Well, we'll see what happens now. It doesn't mean she can't go higher for another few days, another week or two. Anything goes. We're just observing what is available to observe on the chart using the 20-period moving average as the discussion point right now. And we notice she's a little bit extended. And we'll leave it at that. We'll take that at face value. It's an awareness. We're not saying the market's going to sell off on Turnaround Tuesday tomorrow. Maybe it does, maybe it doesn't. We're talking about the bigger picture. A little bit too far from home base. Maybe she gets up another $2 or $3, another 20, 30 S&P handles, and then rolls over. We'll see what happens. Being that we had a Monday floater, it's a half a holiday type of session. Light volume, low participation. We don't have any material change other than the continuing floating melt-up operation in the S&P, so we can turn our attention to something else. How about Tesla? Today, Tesla, the number was 213.70, and as you can see, we had a classic spike the low and rip it back up in the other direction. Well, you can't see it on this chart, but what happens if I go over to an hourly chart and we see this candle here from last week? So this candle was made on Friday and the first candle of the day. The market basically went sideways this morning. Tesla's trading down. One of the members puts it, or multiple members put it in the chat box. Hey, take a look at Tesla. Do we have any numbers on Tesla? Wasn't a stock on the move. It wasn't moving in the pre-market to the magnitude it started moving after the open. So we look at Tesla, I run the numbers, do the work, and we come out with the trade setup, which was a spike the low and rip it back up in the other direction at 213.70. We had some, what you say is, Tesla riders in the live room today. Kind of like some robo-taxi riders. It's hard to tell on a 15-minute chart, but you go from 213.70 in a matter of 3 candles or 45 minutes, the high is all of a sudden what? How about 220? $4+ rip in Tesla. In today's math, that's about 2% on a scalp/day trade. It's pretty darn good. Got something else going on these days too. Put something else on the board that's for the benefit right now of Inside the Number members on a beta test, as you can see here. It's also found in the Inside the Numbers live section for live room members. So if you're an Inside the Number member and or a live room member, right now you have access to this table of information. So what is it? Well, you can see here on the left, here's all the markets that I'm putting up the numbers. S1 is support number 1, support 2, 3, 4, resistance 1, 2, 3, 4. Not everything will have 4 numbers all the time in support and resistance, but the point is I'm giving you the spiders, the Qs, the IWM, smash mouth, bond market, TLT, oil, gold futures, silver futures, natural gas futures, and Bitcoin. So I'm giving you the markets that I continuously get asked about in the live room, and that's where the idea came to put it up on the board so that people can see it each and every day, members of the live room. So I'm running a test for Inside the Number members to see if it's something that they want and see if it could stay contained. If I find it all over the internet, cut and pasted, and other people are selling the information, obviously I'm just going to take it down. But for now, I've gotten positive feedback. I'd like to know what you think. Should I keep this for Inside the Number members? Is this information you would like to maintain? Are there markets you want to see that are not here? Am I missing a market? Are there too many markets? Do we not care about certain markets? What do you think about this table? Let's hear about it in the comments section under the video. Post a comment. Get the discussion rolling about the table. It's found right underneath the Stocks on the Move section each and every day. We'll get back to that later. Now we're off to the commentary. I'm an open book. What I urge you to do is pause the video, read the notes, go back to the chart to double check the work. Instead of posting the numbers up early in the morning at 0:30, we've got the table now with all the numbers. So this is just what's going on overnight, what's going on this morning, what do we need to know to get the day started, what are the big global things out there, what's going on in the world of markets. We'll call this a discretionary piece. And then we get into the where are they now? So here we are at 9 o'clock. Where are they now and what can we do about it? Well, today was a floating operation. First number we had, only resistance number we really had on the board was 582.10. They reacted there for about a few minutes for about 4 to 5 S&P handles. And then they just continued melting up. The next number was 585, and you can see it here. Closing candles above 582.10 will activate another leg up where the next target begins to smell like 585, give or take. And here's an hourly chart of the SPY, and as you can see in the last hour of the day, the high is 585.27, so they reached and spiked 585 and pulled back from it. 585 is considered one of our semi-big fat round numbers. We had some stuff on the board if they were to drop them in a shakeout operation, but that didn't happen, so we didn't need it, but we'll have it again tomorrow. Pause the video. Read the notes. I know today was a melt-up day, but check the notes anyway. Read the notes. Double check the work. It's all in here each and every day, everything you need to trade the morning session in terms of the S&P, and now you have numbers in a variety, a swath of other markets. And then we had stocks on the move today. We had VFC and Boeing. So watch this. So we're now back into earnings season. Started with the financials last Friday. Now you get some trickle effect. They'll get some today after the bell, tomorrow morning, Tuesday morning, and then for the rest of the week and about 4, 5, 6 weeks beyond, we're going to get a lot of earnings coming out. The market's going to move. We're going to get a lot of opportunity. That's what our earnings season is about. So what do you think? We have the commentary on the S&P each and every morning. You have stocks on the move, what's moving before the bell, and then you have this table of information on a variety of other markets. So including the S&P, you have a total of 10 markets here. You get all this every single day for what? $129. So I'm going to tell you this. Here's a forewarning. That price is going up. It's not going up for existing members. It's going up for new members shortly. I made a promise to members a long time ago. If you're a member and you stick with me, I will never raise a price on you. So those that get it today will be grandfathered in when I raise the price. Others will pay the new price. I think it's worth a whole lot more than $129 a month. That's my opinion, and I'm entitled to it. Let's take a look at the charts of VFC and Boeing. We had $19.30 for VF Corp. No great shakes. They came into the number. They spiked it, rallied back a little bit, hung around and just above the number for the majority of the day. No harm, no foul, no great trade, no rocket ride, but yet the number worked. You never know which ones are going to give you the rocket ride. Case in point, how about Boeing today? 146.65 on the board at 0 dark 30. They came into it, spiked it, ripped it back up in the other direction, gave you a base hit, came back to retest it, and then gave you the rocket ride for the rest of the day, or at least into the afternoon hours, and then basically treaded water sideways. But nice trade in Boeing. A lot of participation in the live trading room in Boeing. What's going on over in Camp IWM? Well, as you can see, Friday, today, 2 nice days, right back above all the moving averages, namely the 20-period moving average. The trend is your friend until it's over. Weekly chart, firmly above all the moving averages. Nothing wrong with this market. Firmly in an uptrend. You're going to start to see something relative to the IWM out there on the interwebs. You're going to see this, and you're going to see people tell you, look, this is a head and shoulders pattern, an inverse head and shoulders pattern in the making. Here's your left shoulder, here's your head, here's your right shoulder. And I just want you to remember one thing whenever you see somebody do that. It's wrong. Switch off the channel, close the page, close the tab. They don't know what they're talking about. The neckline has to be going in the other direction. You will see that, and it is incorrect. It does not mean the market will or will not go higher from here. One thing has nothing to do with the other. We're just talking about the folks that think it's an inverse head and shoulders pattern in the making. It's not. Above all the moving averages, trend is your friend. Same goes for the folks down at the transportation department. Buttigieg's crew. Very simply, knocking on the door of the highs over here, firmly above all the moving averages. Trend is your friend, same story. We've got the breakout above the trend line. We've talked about this triangle. We've got it again. We talked about it here. They tried to break out, didn't do it. Tried to break out, didn't do it. Tried it again, didn't do it. Tried it again, couldn't do it, but they're doing it. They're breaking out above this trend line. Where are they headed? What is the target? Write this down, put it on a sticky note, right around 16,000, let's call it 700, give or take. Somewhere in here, right about there, give or take. 16,700. What about the Q people? Same routine with the trend, but I still find it somewhat interesting that they're not at new highs. Same with the semis, which we'll get to in a little while. But the Qs are not at new highs. The S&P's at new highs. The Dow's at new highs, just to name another average. But the Qs have yet to confirm a new high. Double checking in over at the NASDAQ Composite, which is not the Qs, but still yet, again, not confirming. We do not have a new high. They just filled a gap up here today. You see that gap over there? And if you go back to the Qs, we've been talking about this gap for some time. So they filled that gap. The official gap was 496.34, and they filled that and closed above it today. Qs. Anything wrong with the financials? Nothing wrong with the financials, above all the moving averages, but same routine as other markets that are getting a little bit extended from home base. So that doesn't mean they're going to fall apart. It doesn't mean there's going to be a 50% correction. It means that another down day or two is in order to let them work off some of the air-quoted overbought condition, which there really is no measurement for, but yet we know once they start to get a little bit too far from the 20-period moving average, they tend to pull in a little bit. They get a little bit far and they pull in a little bit. That's all we're looking for. They get a little bit too far. Maybe it's another few days. Maybe it's one more day. Maybe it's tomorrow. But then eventually they pull in a little bit. Doesn't mean it's a collapse. They pull in a little bit. It's a technical term. Pull in a little bit. About Smashmouth, the proxy for the Philadelphia Semiconductor Index. Nowhere near the new highs. Doesn't matter. Above all the moving averages, in an uptrend. The trend is your friend. Higher lows. All that stuff is intact. Right now, they're headed to about a $264 target. It's a give or take, but it is the near-term target. There will be, and I repeat, will be, overhead resistance in and around $264. Period. Full stop. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.